All right, let's dive into a really fascinating twist in the whole climate story. For a second, just forget about the protests and the policy debates. What if I told you that the biggest force pushing huge companies to be more sustainable isn't activism, but high finance? Yeah, you heard that right. Let's break down how this massive engine actually works.
So, where are we getting all this from? Well, our whole analysis today is built on some incredible work from the Peer Sustainability Consulting Group. They've really mapped out how all the gears in this financial engine are turning, and we're going to walk you through it.
Which brings us to the big question, right? Why on earth would these massive financial institutions, the ones we think of as being all about profit, suddenly be leading the charge on climate? It kind of feels backwards, doesn't it? So, what's really going on here? And boom, here's the answer. At the end of the day, it's not really about saving the planet, as great as that is. It's about the oldest, most powerful instinct in all of finance, managing risk. This whole ESG thing, environmental, social, and governance, it's not some feel-good side project anymore. It's become a core part of their financial survival strategy. Okay, so let's get into our first big idea here. You have to understand how these institutions see the world. For them, ESG isn't about PR. It's a tool. It's like a financial shield that protects their massive investments from a whole new wave of modern-day threats. And the key thing to get is just how real these risks are now. We're not talking about some abstract problem in the distant future. We're talking about huge, immediate financial losses from floods and fires, massive fines for not keeping up with new rules, and scandals from bad corporate behavior. Plus, their own investors are now demanding they pay attention to this stuff. It's a total pressure cooker. So, how do they deal with all this pressure? Well, let's start with the first major player in this engine, the banks. They have an unbelievable amount of leverage over the whole global economy, and they're using a classic carrot and stick approach to push companies to go green. And the main way they do it is through something called sustainable financing. And honestly, this is a total game changer. It's a simple but absolutely brilliant idea. You tie the money a company can borrow and how cheap that money is directly to how well they're doing on their sustainability goals. So let's break down this toolkit. First up, you've got green loans. That's pretty straightforward. It's money specifically for a new solar farm or a water recycling plant. Then you've got the carrot, sustainability-linked loans. A company hits its carbon reduction targets? Great, you get a lower interest rate. And finally, here comes the stick. If your ESG score is bad, you could end up paying way more for a loan. Or maybe not get one at all. See? Money talks. Okay, now for the other side of this financial coin, the insurers. If the banks are all about funding the future, insurers are completely obsessed with calculating the risks of that future. And let me tell you, for them, climate change is the biggest, scariest calculation on their spreadsheet. Their whole toolkit is designed to push for resilience. If your company's headquarters is in a flood zone, they might say, we won't even cover you unless you build a seawall. Your insurance premiums will go up or down based on your climate risk. But just like the banks, they have a carrot too. If you can show you have strong ESG practices, like you're actively reducing your carbon footprint, you could actually see your insurance bill go down. So here's the bottom line. You have these two different approaches working together. The banks are mostly playing offense, using the carrot of cheap money to encourage good behavior and fund green projects. Meanwhile, the insurers are playing defense, using the stick of higher premiums to force companies to protect themselves from future climate disasters. Together, it's this incredibly powerful pincer movement. Now, you might be sitting there thinking, wow, this sounds like a ton of pressure on businesses. And you're right, it is. But the story isn't just about being forced to do things. For the smart companies, this shift is actually a huge opportunity. There's a real payoff to getting on board with all this ESG stuff. Leaning into ESG gives companies a kind of triple advantage. For one, they genuinely lower their own risk by spotting threats they might have otherwise ignored. 2, they get on the same page as pretty much everyone, from their biggest investors to their everyday customers. And 3, it gives them a serious competitive edge. In a world where capital, talent, and partnerships are all flowing towards sustainable companies, having a strong ESG game is a massive advantage. And this isn't just some abstract theory. Take a look at BlackRock, the biggest asset manager on the planet. This quote says it all. They're not just asking nicely for change anymore, they are actively using their voting power to go after board members who aren't taking climate risks seriously. You can bet that gets the attention of the C-suite. And you can see the proof right here in what these huge institutions are doing. I mean, look at Lloyd's of London, the heart of the global insurance market. They're straight up phasing out insurance for coal and oil sands. Or check out Bank of America. They've already pumped over $10 billion into renewable energy through green bonds. These are not small gestures. These are market-shaping moves. And if you need just one number to really wrap your head around the massive scale of this whole shift, here it is. $1 trillion. That's the amount of money that banks like HSBC and Citi have each committed to sustainable financing by 2030. We are talking about a fundamental redirection of trillions of dollars of capital designed to reshape the entire global economy. The scale is just mind-boggling. So the momentum is obviously huge, but it's really important to be realistic here. The system is far from perfect. When you try to move this much money this fast, you're gonna create new problems. And the road ahead means we have to be super careful to make sure all this financial pressure actually turns into real, tangible progress. The two biggest roadblocks right now are greenwashing, that's companies basically faking their green credentials, and just a mess of inconsistent data. The only way forward is to crack down with much tougher audits, and this is the big one, create unified global standards so we can actually compare apples to apples when we look at a company's performance. So that leaves us with the ultimate question. Is this financial engine, this thing driven by pure financial self-interest, powerful enough all by itself to actually steer our entire global economy towards a future that's truly sustainable? The answer to that is probably going to define the next decade for all of us.